All right. Hey traders, TG Watkins here. It is March 15th when I'm recording this. Hope you guys are doing well out there and surviving this market. I think that we finally have a low for the market. I'll show you guys all the clues that I've been seeing. It has been a few false alarms trying to figure out where this thing is going to finally turn around, but now it actually looks pretty clear. I'm seeing some strong divergences out there. We had a really good day on Friday. Internals were very, very strong. So a low seems to be in, but my concern is if this is the low. That's the problem. So remember, this is for educational purposes only. This is going to be the list of tickers and indices that we go through. But kind of the first couple of things that I wanted to talk about is, should you buy the dip or buy the dip, but should you hold? Yes, I think you should buy the dip if you're more of an active trader, because I do think this is a low. The market did hit 10%, and we are starting to see indications, we're starting to see divergences that this thing's ready to kind of go back up. That's good. But my concern is that this buying the dip is going to be a bounce and a downtrend. And the unfortunate thing that I've been seeing out there is a lot of YouTubers and other financial people, and I guess I'm one of them, but what I'm concerned about, the other ones that are saying, specifically, I saw one person's like, this is how the millionaires make all their money, is they buy the dip. This is where they make the most money and the biggest returns. And that's true in a bull market when things are doing well. Of course, when corrections and pullbacks happen, buy the dip, and that's how you can really maximize your returns. But the problem is when a buy the dip keeps dipping, or if we change into a different market and buying the dip no longer works. Like, it works until it works and then it doesn't. And that's really what I'm concerned about, is everyone's so used to the market going up that whenever a dip comes out, everyone's like, buy the dip. And it's like, well, yeah, but not always. And I'm concerned that that's kind of where we're at, because what the financial people or the YouTubers that I'm seeing are not talking about is they don't know that things have changed out there. They're only saying, this is a really big dip, go buy it. They're not saying that Trump is no longer paying attention to the stock market. Of course, we know he's paying attention to the stock market, but basically he's saying he's got his eyes on other priorities. He's got different things going on, bigger fish to fry, and he's okay letting the market do whatever it wants to do to reposition itself while he gets his other stuff done on his agenda. Besant has also come out and said, hey, the economy is addicted to stimulus. We are on a government growth-based economy instead of a private sector growth economy. They're going to try and change that. There's going to be some uncertainty as we go through that. We have tariffs. That's going to be some change. There's a little bit of a tariff war. There's a lot of news back and forth. Jerome Powell last week came out and he said, hey, we understand that the market's going down. There's some volatility. Yes, a new administration has come in, and we're going to let the dust settle before we really decide what to do as far as interest rates. We're not going to react too quickly, and we're happy with where we're at. The economy is looking okay, and we are not in any rush to cut rates. So that's what I think people are missing, is that the narrative has changed right now. The market is uncertain. They are cautious out there. A lot of money has suddenly come out of the market and gone elsewhere, actually gone into maybe China, gone into other European stock markets and other things. We're seeing some strength out there. It's gone into consumer defensive. The whole tech situation, growth. I mean, look at small caps. They got annihilated. Okay, this is not... I think there's something that has changed underneath the surface, and it's all this stuff about the new administration. Now, does this put us into a bear market? I don't know. What if we just go into a very big, long consolidation range? That is possible. If we actually come over and look at something like one of these areas, where if I back up and, look at 2015, we could be in this area. We could be in this, okay? That is my concern, is that when people are coming out and saying, buy the dip, they might be right for a while. And look at that. But then what happens if we eventually roll over again? And I believe this was all during the Brexit situation. And, we could be in a situation like that. Not Brexit specifically, but, there are a lot of things that are starting to change in our world right now because of the tariffs, because of the reallocation, Doge. They're trying to reposition our entire government structure and all this kind of stuff. And so we could be into some chaos. And so I just want to put out some concern out there that buying the dip may not exactly be buying the dip. Maybe eventually it will work out, but I don't think we know when that's going to resolve. And I don't think we know exactly what path and what kind of turmoil we might be in, at least for the stock market, until things get resolved. Okay, yes, I do think eventually we move up. you always do. It's just a matter of what that looks like and how long that goes for. Even back in here, buying the dip, okay, it did work out, but there was some noise in between until that all happened. And so the other thing that I'm concerned about is if we come and we look over here, how do we know what this pullback is going to look like? Because here was a situation where you buy the dip and it did move up, but then we had a dip and another dip. Eventually it resolved, but that was a lot of heat to take for 3 months over there. And what if we do get into some prolonged weakness? Again, I don't know if we're going to get into a huge bear market. It's too early to figure that out. But you can see where buying the dip got a rebound, buy the dip got a rebound, but we kept dipping. And that's what I'm concerned about, is that the narrative as far as the market might have changed, and we're probably going to be in this repositioning type of situation that I think we need to be a little bit more nimble for, and a little bit more, nimble, agile. We need to understand that this could be a bounce in a downtrend, and we are not totally confirmed that this thing is just ready to go yet. Okay, so that's kind of my 2 cents on that. Yeah, and then as far as, okay, I think some divergences are here. So this is what I want to show you guys as we go through some of the tickers and why I think that the low is in. Number one, we've hit 10%. That's a pretty textbook type situation. The crazy thing about it this time is that we went from a new all-time high to actually more than 10%. It was like 10.4 or something like that, correction, in a straight line. I mean, there was no bounce. It went just day after day after day. It kind of came down there, and that was very fast and very brutal. And I think that is also communicating something. So yeah, I think we've gotten oversold. You can see we have a gap between some moving averages here. We are outside of our ATRs, all that kind of stuff. We're pretty extended, and I'm starting to see some divergences. What I will show you as I continue walking through some of these tickers is that on, I think it was Thursday, the S&P made new lows. Meanwhile, things like the FANG stocks or Tesla, the semis, even the NASDAQ, they all made higher lows. So that was something that was very interesting to see. So new lows on the S&P, and then NASDAQ was a double bottom, and other stocks were making higher lows. So divergences starting to kick in. I'll also get to the UVIX and all that kind of stuff that I can show you in a little bit, because there were also some clues there and they are following through to the way that I want. So let's kind of go through some of these things, and let me show you also the internals on Friday to help show you that this was actually a pretty strong day and situation. So yeah, look at the order flow, the internals of order flow. This was very strong. I mean, it basically averaged 9 to 1. So for every 9 shares that were being bought, 1 share was being sold. Very, very strong. You can just see across the board, these were very big numbers to the bull side. Okay, so very, very good. We haven't seen that in a while. And then you can also see here that for the advanced decline, you could also see the advanced decline was basically through the roof. Okay, everything was up, and that was fantastic. So we really got to see some good stuff there. And yeah, happy with the internals. So that was really looking good. And near term, we could see that Thursday, we didn't know it until the next day because it closed on its lows, but there's your double bottom. We've had numerous double bottoms, none of them held. Now it looks like this is holding. A couple other things to note is that the other thing that has changed, because what you're trying to look for is what's different. And the thing that is now different is that the hourly S&P now has the 8 over the 21. That has not happened until now. We could still get some turbulence, but basically I'm trying to say it looks to me like the low is in. We should start repairing and we start moving our way up. I'll give you guys a little bit of guidance as to what I think will happen. If we were to be moderate, I think we can bounce up to around the daily 21. Of course, it's a fuzzy line. It can go above it, whatever, but just around the daily 21. If we're going to go really far, I think we can get up to the daily 50. Now remember, these are moving averages. So just because the daily 21 happens to be at 5,800 doesn't necessarily mean it's going to go to 5,800. It could go a little bit less, it could go a little bit more, okay? Same thing with the 50-day SMA. If right now, I'm just ballparking this, but if right now it's at 5,950, well, if it takes a couple weeks for this to bounce, well, this moving average might end up being at 5,900, okay? So just remember, this is why I like to use moving averages instead of prices, because if I think it's going to go to a certain moving average, well, whatever that moving average is at the time, that's where I think it's going. So small target, daily 21, bigger target, daily 50. In a crazy thing, we could kind of come up like this and then go right to it. Okay, we'll have to see how big this short squeeze covering is. But if it's not quite like this, then we might come up here. We could come all the way back down to test, and then maybe we come up like that. Okay, we don't know exactly what path this is going to be, which is why if you guys are going to be trading options or doing something to that extent, if you're going to be doing long calls, you either need to keep your time frame very short so that you get these short moves and you can kind of cut this up into pieces and do it that way, or you need to give yourself more time to be able to go from here and up in here with a lot of bumpiness in the middle in order to get there. Because if you have not enough time on your option, you're just going to run out of time. The theta is going to eat you up, and the VIX coming down is also going to eat you up. Okay, that's why. And I'm doing a couple strategies, but one of my bigger strategies is I'm doing a put credit spread. VIX is high. That means that when we start getting prices to come up, the VIX is going to collapse. That's going to actually help premium go away, which is good. We want premium to come out of the market if we're going to be selling credit spreads. And basically all I need, it doesn't matter what path the market will take in order to go up, as long as it goes away from my entry on these credit spreads, I will make money. Okay, so that's why I'm more interested in doing that, because I just don't know what the upside is going to look like. Now, to kind of hedge with that, I am doing some directional, but I'm keeping them smaller, and I'm doing spreads because just in case either whether it's wild or whether it takes some time to get back up there, I should make a little bit extra. And even if it doesn't, then my put credit spread is covering me. So I'm setting up my trades so that I can basically win on both, even no matter what kind of market condition we get going forward. Okay, so that's pretty much the S&P. And then if we look at the NASDAQ, it's gonna be more or less the same story. You know, this thing went down, I think it was 12 or 13%, and you can actually see there's a very clear double bottom right there. Oh, and then the other thing, guys, I'm going to be, let's see. Yeah, so that reminds me, I'm going to be actually doing a webinar and then a class. So the webinar is going to be March 26th, 7 o'clock Central. I'm going to be showing you guys how I do these day trades and then also these swing trades. So that's why I'm doing a little bit of both, because in this market, you kind of need both. I mean, there are days where, hey, don't want to do anything for swing trading, but we got some day trading we can do. And right now I'm starting to see some opportunities that we can kind of put on some short dated swing trades, and then we can kind of day trade in between. So this is a market where I want to go back and forth between the two. And that's why I really taught myself how to do some of these 0 DTE day trading strategies on the S&P for basically segments like this. When the market starts to get crazy and my list of good stocks to be trading for swing trading purposes just kind of go up in smoke, I'm left with short-term trading of the S&P. So now I have both options. And so we're calling this the dual trading, you know, situation to where we're looking at this. But yeah, come on over, register for this. It's free. I'm going to kind of show you guys what I'm seeing in the market. I'm going to show you how we've been trading this, what kind of gains we've been making, and specifically the market moves that we've been taking. So yeah, go ahead and sign up for this. The link's going to be in the bio and all that stuff. But yeah, so the NASDAQ, you can actually see here's your double bottom. This is also a particular formation that I call the elf shoe. That's another thing I'll be going over and be teaching this in the class that's coming up. And yeah, it looks to me like we finally got a turnaround. So I would love to see some follow through on Monday, but basically early next week, I think we should start getting over the hourly 50. And again, start heading up towards the daily 21 and then hopefully a little bit further. If we look at the IWM, yeah, this thing got super crunched. It has been really hard to find any kind of clues on this thing until finally Friday. I think we've got a turnaround. But just to show you guys where this all started, look at price and how it perfectly bear flagged into the underside of a downtrending daily 50. At the time, I was still leaning a little bit bullish. I was hoping this was going to be able to get over it. But once this thing actually broke and got rejected by this, we went to cash because I was aware that this was either going to be able to break up and over it, or this was going to be bad news bears and get rejected by it. And so once we got our answer of it breaking down, I knew that this wasn't going to be good, and we went to all cash, which was a great thing because thank goodness we were not writing any of this stuff down. The thing I can kind of point out for the IWM is some divergences. You can see here, price down, look at the Moxie indicator up, and we're making new highs on the Moxie indicator. So again, I think that we're starting to see some of the tides turning, at least for this down move. If you look at the Dow, same kind of thing. It's been pretty murky to really pinpoint anything, but you can see we just went outside of these outer boundaries here, and we finally got some sharp divergence here, and we got a nice rebound. But this market has been down, 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 and down until it hasn't. And so hopefully that's what we're starting to see is some turnarounds in that. SMH, this is where we also started to see some divergences. So what I want to point out is if you look here, and I think that's basically Wednesday, Thursday into Friday, what you'll notice is the S&P made lower lows, didn't it, into Thursday. Look where the SMH was. Look where the semiconductors were. They were up here. They were basically doing an inverse head and shoulders. So that was the first kind of bottoming pattern. And when the S&P was making new lows, these were still up here, basically retesting the low area. That's good. That is the kind of stuff that we look for. And what it's telling me is that there are a lot of stocks that are not interested in going down, even though the S&P is going down. So there's a divergence. It's basically saying, hey, we're already down, we're already low, we found our support, we're just waiting for you to get your stuff figured out. And then you can see how perfectly this worked. This is just another clue. I mean, look at this rebound. I mean, there you go. That's what I'm expecting for the rest of the market. And the semiconductors were actually leading the way as far as their strength. And you can see they are definitely over their hourly 50 when everything else is just now starting to get to its hourly 50 and trying to cross over its hourly 50. So those are looking good. If we look at FNGA, this is the leveraged ETF of the FANG stocks. We've been taking a couple trades in through here. And again, I think we finally found that low. Here's another big clue that I like to look at. A lot of people don't know about this, and they don't. I've talked to a lot of other traders in the past, and I said, hey, do you guys ever look at these leveraged ETFs of these things, and do they mean anything? They're like, oh, no, it doesn't really mean much. Not a lot of people trade them because whatever, for whatever reason. And I just didn't really believe that. I kept looking around. I had to make my own decisions and judgments about this, and I'll show you what I see. But look at this, the low of the market and of this index, this ETF, was the high volume. Now, this was before Friday, okay? So just noting that as of like Tuesday, whatever date that was, and then Wednesday, Thursday, notice how this was the high volume and it was the low of this market, of this pullback. And I said, I think that's it. I think that is absolutely it. And then the next thing I noticed as far as volume, look at Friday morning. Look at this giant volume bar on the hourly chart on Friday morning. Somebody knows something, okay? This was the turnaround. Big money came in here and they bought it. And look at the volume that came out through the day, okay? Massive volume at the lows. So this is really, really reinforcing my view that at least a low is in the market and that we're going to start moving back up again. But my concern is that this is just a bounce and a downtrend. So we're going to trade this up, but I'm going to get out at the top and then we're going to reposition and see how this thing looks. So I am buying the dip, but I am not holding the dip. I'm willing to take it as a trade, but that's about as far as we go. And then also you can notice that, see how this was putting in higher lows compared to the S&P putting in lower lows? Divergence, okay? That was another big thing that was helping me decide to actually get in here and stay in. You can see the same thing of Tesla. Now, I know Tesla had some news, Trump and all that kind of stuff, and Elon saying, hey, we're going to double production. Okay, so maybe that is why a lot of volume came up. But it's the same phenomenon that the FNGA had, is look at the low area and look at the volume spikes, okay? That was the low. That was the low of the market. And then you could also see the same thing here, that even though the S&P was making lower lows, this was making higher lows. We were starting to see some divergences. And you can see here we're starting to hold these moving averages. And these are going to be some of the things that I teach in the Moxie class that's coming up on April 5th are divergences. So notice we had price down, Moxie indicator up, and also this. Here's price below the 50 SMA. Notice how the Moxie indicator is above zero. That's what I call a trampoline move. And the reason I call it a trampoline move is because it's like a trampoline. You come here, you jump on the trampoline, and it shoots you back up like that. So some pretty cool fun stuff on that. All right, so then let's kind of take a look at some breadth, because this is also an interesting area. If we SPX A50R, and this one, again, I'm looking for divergences. There's a little bit that I can point out, but mostly what I want you guys to see here is if we look at the history, between 30% and 20% of stocks over their 50-day SMA, you can see that that tends to be about where this indicator likes to go before reversing. Of course, there are some lower ones in through here, but you can see that the bulk of them go between 20 and 30%. You can even see the market rebounded the last time we were between 20 and 30%. And so here we are Friday, Thursday, coming into this at about 20 to 30%. And I said, hey, we're getting pretty low, pretty extreme to the downside, and we're probably getting to an area where we could start bouncing. And sure enough, on Friday, we turned around. So I think that this is going to help us and help indicate to us that this is the low for now. The other thing I can do is if we look over here, a couple other internals, and you can see that this is new lows, and you can see the new lows spiked. That didn't exactly put in the low for the market, but it's something to look at because you can see in the past that when the new lows spike, that does tend to put on a low. So we're pretty close. We were pretty close to it, and you can see there was kind of a little bit of an aftershock of another new low as the market continued to go lower, and now we want to see these things, the new lows start going down. So I think that was another little bit of a clue, maybe even some divergence. So you can see here. Let me show you a little better. You can see here that went higher even though the market went lower. So again, divergences. Everything I'm seeing here is about divergences trying to tell us the story of the market. And if we look at the 20-day SMA breadth, no divergences yet, but the same phenomenon I was showing you before about them getting pretty low. You can see here that usually the low of a market move is when these things get down to very low numbers. So the number of stocks over their 20-day SMA got down to 20, maybe like 18. And you can see the last time it bounced was about 10. And you can see here it's down about 10. But then you can see here and here and here were all times that it got about 30. So you can just see we're starting to get into this low area. That probably is a way to tell us, hey, we're probably likely to bounce. So that was another clue that I was seeing out there. And then we can look at the put-call ratio. And if we come over here, the put-call ratio, I've been saying, has been pretty unreliable for quite some time, but now I think it's going to start being meaningful. I do think we need to start paying attention to this. We did get a spike up to 1 on that one particular day, but really we're looking at the 10-day moving average, and the 10-day moving average at least came up, giving us a little bit of a support, basically saying so many people are now buying puts that actually we're probably going to put in a floor. So we should watch this kind of come up. We'll see if it comes down. And then if the market continues to go down after this, we need to keep watching this put-call ratio to see if we actually do start climbing up bigger to then indicate that we could be putting in a bigger low. So yes, I'm going to start paying closer attention to the put-call ratio on this. Now let's get over to the UVIX and the VIX. And then guys, if you guys, I know you're watching this on YouTube, so anybody maybe who's new to the channel or kind of likes how I do this and enjoys watching these, make sure you guys hit the like button and subscribe so that you can start checking these out every weekend that I put out. Now, this was the other thing. And for those of you who are in the Moxie room or even a subscriber at Simpler, you guys saw me talking about this even on Wednesday. And then I posted this on Thursday and then maybe Friday on my X page. So I'm trying to put the word out there, but those of you who are subscribers are going to be getting this first. And those of you who subscribe to me as the Moxie Trader, you guys understand these teachings and educations and patterns that I put out there. And so if you guys are interested, come on over. We have $7 trial for 30 days. You can find the link in the bio and all that kind of stuff. Sign up at simplertrading.com. Check out my webinar on the 26th, and then also the class that I'm going to be teaching April 5th. So I haven't taught this class for 4 years. I figured now is a good time. And, as this market was great and then it's a little bit crazy now you need to know now it's even more important to know how to navigate this market. But check this out. If you look at the UVIX, this is another common pattern that I talk about, 50, 200, 50 maneuver. And so that the fact that the UVIX ran into its daily 200 told me we were probably at a turning point for this, which meant we're probably at a turning point for the market too. And sure enough, we were. And then it was Thursday that even though the market was making new lows, notice how the UVX was making lower highs. That's another divergence that I was seeing. We could also point out that price was trying to go up across a downtrending 15-minute 50. Notice how that was a change. If we zoom out, notice how this whole downtrend for 3 weeks had the 15-minute 50 moving upward. What changed? Well, now the 15-minute 50 is moving downward, and look at the Moxie indicator now below 0, whereas before the Moxie indicator was above 0 this whole time. So now it's below 0. Something changed going into Thursday. Like we saw it Wednesday, kicked in Thursday, and then we continued to see the follow through on Friday. So this is how we started to see that the bottom of the market started to show up about Wednesday, even though it made lower lows. And if you look at the VIX, we could see this even more obviously on the hourly and 15-minute time frame. Notice how even the hourly 8 went below the 21, change of trend, right? Notice how price got below the hourly 50, change of trend. Notice how the 15-minute 50 was very much in a downtrend compared to being an uptrend, change of trend. These were the things that were help telling me that this market, in fact, the low was here, at least for now, and that gave me confidence to go into a few more tickers and load up on some of our current positions. So yeah, I'm very much buying the dip, but I don't know if I'm going to be holding the dip. All right, and then let's talk about Bitcoin, because I've been saying I think that we're at an area that we should be bouncing. pretty darn close to that. So let's see, the first time I talked about this, I said, yeah, we should probably get a bounce. We in fact did get a bounce because Trump came out and said something about Bitcoin reserve. And then last week I was saying, yeah, we should still kind of bounce in this area. And then I was on the mic and actually came here and you could see that things were down. I was like, still think we should be about where we should be bouncing. And for all intents and purposes, you can see here there's still a level. Notice the positive divergence on the Moxie indicator. And, you know, we are starting to kind of move up again. So I do still think that we are in a bounce. I think we should find some support here. Bitcoin is at the monthly 10. It's basically at the weekly 30, weekly 50. And I think that this, and you can see even the gap here where we close the gap. So I do think we should find some support here. I do think we should bounce. The question is, how far do we bounce and for how long do we bounce? Because I'm not totally confident that this is where you buy more and with the anticipation that this is going to continue going higher from here. I'm concerned about the market right now. And so we're just trading bounces until otherwise. So that's Bitcoin. And then, of course, everyone has been talking about gold, but I don't think many people are talking about the gold miners. And I like to trade the gold miners when I do because, well, they move a lot, and I can trade GDXU, which is the leveraged ETF of the gold miners. And you guys know I like my leveraged ETFs. So we've been talking about this. Things are looking pretty good. Nice pullback right there on the monthly and weekly. And then if we look here on the daily chart, basically I got everything I wanted on this. It was so incredible. You can see we had a pullback into the daily 50. We had a pullback into the hourly 50. We even had a pullback into the 15-minute 50. So I said, this is ringing my bell. Let's go in. So we bought GDXU right here at this line. You can see that's where we got in, and we had 2 great days of a breakout. So very, very nice, even on big volume. We had a squeeze. We even had a squeeze here on the hourly chart. The Moxie indicator had a squeeze. Just everything. This was a fantastic setup. And so we loaded up on this one, doing pretty well. We loaded up on a few other things, and so we're ready for this bounce to turn and you know, have a good day, have a couple good weeks. So still be careful with this market. Trump can come out and say anything. We've got a lot of moving parts out there, and just kind of be safe because, again, I think I'm just concerned that this is not the final dip that we're going to experience. Okay, guys? So we'll see you later. See you next week, and catch you in the room. Take care.